Jim Cramer looks ahead to see if this market rally can continue. Jim Cramer discusses the recent market milestone of the Dow reaching 40,000 and the upcoming earnings report, particularly from Nvidia, which he considers the most important of the year. Cramer expresses his belief that the market is in a waiting game, anticipating these reports, and shares his expectations for companies like Palo Alto Networks, Macy's, Lowe's, Toll Brothers, and Target. He also mentions his bullish stance on growth retailers like TJX and Target, as well as analog devices and Williams Sonoma.
Full of surprises. That's Nikesh Arora, the incomparably competitive CEO of Palo Alto Networks, PANW. Nikesh was not happy with his last quarter, nor was the street, nor was I, because my Chapel Trust owns that the stock got clobbered, dropping from 366 to 266. Man, that's a clubbing. Since then, Palo Alto has changed its mission, embracing a platformization strategy, acquiring IBM's cybersecurity business this past week. Now, we own it for the Chapel Trust, as I mentioned. You know what? I am betting that this will be a better quarter than the previous one. Tuesday's got some huge quarters, starting with Macy's, which will be Tony Spring's first full quarter as CEO after being promoted from running Bloomingdale's, where he did such a great job. I am expecting solid results. Now, can Lowe's put up good numbers, even if its chief competitor, Home Depot, said do-it-yourself renovators are weak? What can you do? And that's in part because there's just not a lot of housing turnover. Lowe's is so well run and such a good place for gardeners that I think the quarter might be well received, but they do have more do-it-yourselfers than Home Depot as a percentage of the entire mosaic. After the close, we hear from Toll Brothers. Now, I bet CEO Doug Yearley talks about how home prices keep going up, but the buyers don't stop. The housing shortage is just that powerful. And those who are doing well financially, they want to buy from Toll. I've known this company since I was a teenager in Philadelphia, and I've watched them perform amazing things. Yearly will give you an incredibly comprehensive overview of the business. Now, this morning, Matthew Boss, who is the dean of retail analyst, by the way, J.P. Morgan, had terrific things to say about TJX, which, like Palo Alto, is a big position for my Chapel Trust, where you can get out your own proprietary research on the stocks that we own if you join the CNBC Investing Club. Now, I think TJX is going to do a great job, but please don't trade it. Especially don't trade it that morning, because management tends to tell a conservative, and some would say downbeat, I'd just say non-promotional story, but it throws people off. Oh, and the first move for the stock at the opening is almost always wrong no matter what. Then there's Target. Judging by how well Walmart did yesterday, I have to believe that Target could put up some pretty good numbers. Now, the growth retailers, it's classically cheap, trading at just 17 times earnings, 2.75% yield, and their stores, well, the brands that they have are legion. That's how cheap they are. Target stores have a good look right now. I think they have lean inventories, all of which points to a better quarter. Next, analog devices has been one of the stalwart industrial semiconductor plays, IoT typically, and it's worked its way higher over time. It does have moments, though, like when it reports where it lets people down. But I think that's when you have to buy analog devices, because its chips sell into many industries that are currently in bull market mode. Williams Sonoma under Laura Albert has been such a strong company. It's the digital business, the dominant business line, and its stores and its merchandise are always fresh and joyful, which resonates with the public. Hence the stock's spectacular run from 115 to 309 in just 1 year. Albert's unassuming, non-promotional, but what she's done is just nothing short of extraordinary. By the way, it's also a testament to the power of good taste. Wednesday night brings perhaps the most important earnings report of the year, as I mentioned, and that is, yes, for Nvidia. At this point late last year, the company shocked Wall Street by offering a sales outlook that was actually $4 billion above what we were looking for. One of the biggest misses I've ever seen, which caused the stock to fly so high that it spent the rest of the year consolidating. Ever since then, Nvidia's had the most analyst coverage I've ever seen, more mind share of this market. Everyone talks about it constantly. And that's because of two trends. Two trends it dominates: accelerated computing and generative artificial intelligence. NVIDIA's chips are the power behind so many advancements. And other than AMD, nobody else has a product that comes close. NVIDIA's going through a transition from powerful chips to even more powerful chips, which now go under the name Blackwell. And a lot of people are worried that the transition could be hazardous, because who'd buy the old chips when they know that the new chips are coming, even though, of course, they're on allocation and it'll be really hard to get. But you know what? That's what people have been doing with semiconductors my entire life. Plus, the old chips here are quite capable when you stack them up together to doing amazing things. They're not worthless. They're not they're not outmoded. In the meantime, NVIDIA's roadmap's pretty darn clear. All that said, I expect some extreme volatility around this quarter. I'm not going to tell you to buy it Monday. That's too simplistic. This is no trade. My mantra remains the same. Nvidia, own it, don't trade it. Only Apple is in that same class with me. Be ready if the stock pulls back. You want controversy? I'm going to give you some controversy, and it's not Nvidia. It's Elf Beauty, ELF, the maker of inexpensive makeup that's taken the world by storm. Many skeptics think this stock has peaked. We frequently have the CEO Tarang Amin on the show, and I think that Elf has done, it's got a lot more upside. And Amin was on last time, and I just thought he told a fantastic story. Look, they only have a small piece of the cosmetics business, and I've been recommending it. Others have been shorting it. They will be wrong. Two controversial names report that night, too, Snowflake and VF Corp. Now, both have new CEOs. Sridhar Ramaswamy took over from the legendary Frank Slootman at Snowflake, and you know what? I'm still not sure exactly how the company's doing. There are reports that he's about to do a major deal with a startup called Reka AI for more artificial intelligence exposure. That'd be good. VF Corp's run by Bracken Darrell, late of Logitech, and he's still trying to get his arms around that mess. He inherited it. Not his fault. But it could be the quarter where he lays things out for the future. And look, I don't know, it might take a little bit longer, but I like him. Let's see if we can like the company. Thursday morning, we hear from the apparel company that's producing the best numbers of late, and that's Ralph Lauren. CEO Patrice Levay has been able to reach younger generation, using them with a lot of I'd say, fashion-forward ads. How about that? And he's converting them to a great brand. Last time he reported a terrific quarter, but it took a couple weeks for people to realize how good it was. The same thing could happen again. Now, one of my favorite medical device companies is Metronics. They also report in the morning. It's been getting a lot of approvals that I think can lead to big numbers. I may be early, though. Boston Scientific's the current favorite. But this one's turning into a winner. After the close, we get results from the footwear champ, which is Deckers. They own Uggs, which we all know. But they also own Hoka, the hottest athletic shoe. Save maybe On, which is symbol on. I expect still one more great quarter from Deckers. People have been betting against it. I think that's ill-advised. Now, one of those consistent fintechs is going to report on Friday, and that's Intuit. Now, they own QuickBooks, MailChimp, Credit Karma, and TurboTax. I think Intuit had a great tax season. Small businesses just can't stay away from the QuickBooks. Finally, Ross Stores, an off-price chain like TJX, should also deliver an excellent set of numbers. The frugal consumer loves them both. And there's room for both of them, I think, as far as I'm concerned. Plenty of room, because that is exactly the segment that we find more people in than ever. The bottom line, lots to love next week. But look, for many, it's really just going to be about Nvidia. I'm not kidding anyone. I just hope we clear out the short-term traders for Nvidia and end up with a more reliable, steady, believing shareholder base. Let's go.